Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen along with our co-host Anthony Faso. Today what we're going to be discussing is the often asked question, is your premium a deposit or is it a payment?
You know, a prime example of that is one of my clients. They've been a client for a few years, and we were going over their policies, and the wife's like, I don't know if I feel comfortable making the next premium. I'm like, okay, how's business? I thought maybe there was a cash flow issue. No, business is actually really good. And then I asked her, I go, do you view this premium as a payment or as a deposit?
Oh, good question.
And she goes, I view it as a payment. And so that mind garbage that she had is what was getting in the way of her making her premium. So, Cameron, I know you often talk about how important words are, right? So that's what we're going to talk about today, the difference between is a premium a deposit or a payment. But Cameron, before we do, I'd like to ask a favor of you.
Of course.
Okay. So oftentimes when we're preparing for our podcast,
Yep.
you kind of know what's coming on, but we're preparing for this. We often think, oh, this podcast is going to be short. This is going to be like 10, 20 minutes. But what happens, Cameron, you end up talking about taxes, right? How awesome CPAs are and how awesome Paul Mitchell products are. So I'm saying, doing me a favor today, let's just focus on the topic. Let's put Paul Mitchell off a little bit to the side, and let's focus on premium, or is it premium a deposit or a payment?
I will kindly do my best to rein those topics in today.
Okay, Cameron, you are a big proponent on how important words are. So why don't let's define what a payment is.
Absolutely. So I went to our trusted source, Wikipedia, and I actually looked up two different words. Payment and expense is because I know I'm guilty of using those two words interchangeably. So if I use those on the podcast, forgive me. We looked them up, and they're almost identical. But the Wikipedia definition of payment is the voluntary tender of money or of things of value by one party to another in exchange for goods or services.
And as we would just kind of summarize or define it, a payment is sending money to someone else.
Yep. And same source, Wikipedia, defining a deposit. It's the act of placing cash with some entity, most commonly with a financial institution such as a bank.
Or we can summarize it as a deposit is receiving money into an account that you own and control.
So, Anthony, based upon those definitions, I would ask you, what is a premium most like, a payment or a deposit?
Well, to me, I think it's very clear that your premium, and again, we're talking whole life premium. Like I might put term would be more of a payment or an expense because we're not building equity. However, in a whole life policy, you are building equity every time you make a payment. We are increasing your cash value to an account that you own and control. So I would say a premium is more like a deposit. Would you agree?
Absolutely. And I would say that some of this confusion is almost brought about through other advisors and other agents. And it's the way that, it's positioned. Would you agree?
Yes.
Right. And one of the words that I hear almost all the time is that you only need to pay a premium for 10 years. Or you only need to pay a premium until you're age 65. Right? So that kind of gives the impression to someone that, hey, this is an expense and we want to start making that payment as soon as possible.
Exactly. And we are not big fans. Those are called limited pays, right? Where you pay for a limited time. But again, if you view your premium as an expense or a payment, you want to stop payments as soon as you can.
Yeah.
Right? But when do you want to stop making deposits?
Never.
So then why would you limit yourself in a whole life policy where you could no longer make deposits, right? So what the way we design these policies, you can turn off premiums literally at any time, right? Now, a little caveat: if you do that before year 7, the policy it will become a mech, right? But
Potentially.
right, but we don't know when you want to stop making deposits. It could be 10 years from now. It could be 50 years from now. It could be when you're 65, or it could be 85. So we want to have options.
Yep.
Nobody knows what's going to happen when you're 85, or who knows what's going to happen tomorrow.
Yeah.
Right. So we want to keep those options open. So we will design a policy with various options. Right. And a common thing I see by some other insurance agents, another example of how they don't know the power of a properly designed whole life policy, is that, they're focused on rates of return, right? What's the rate of return of this policy? And if you're focused on rates of return, if you do a short pay like that, it's actually going to make the return higher.
It will. Yeah.
Right. But here's my thing. Until I can pay my mortgage or put food on the table with the rate of return, right? I don't care about it. To me, it's all about the bottom line. What are the dollars I'm going to have? And Nelson talked a lot about stop focusing on the rate of return, or to focus on the volume, like the volume of interest, and really a better way is focus on the dollars.
Yep.
Right? Because you might have a short pay policy with a very nice rate of return, but what happens the year after you stop? You can't put any more money in that policy.
Yeah.
What are you going to do then?
You got to go find another source.
Right. Or, okay, so then you start another policy,
Yeah.
but then again, you're starting from scratch. Right. And with infinite banking, really, your policy is not an investment. And I think that's what some other insurance agents are trying to do is, hey, look at this tax-free rate of return, which, don't get me wrong, that is impressive. But we want to focus not just on a good rate of return for a short period of time. We're looking at strategy of this lasting literally your entire life. Because the real value of infinite banking isn't what's happening inside the policy, it's what happens outside the policy. What you do with the policy, that's where the real magic is.
Absolutely, couldn't agree more. And this topic kind of hit home for me as Anthony and I were talking about discussing this, is because I was thinking back to the first several years that Jessica and I had our policies, and we had this conversation a lot. Right, it'd come around premium time, and we had several policies that were all funded right around the same time when we started them, and so we would get those premium notices, and they were pretty large, right? And so we'd always kind of sit down, and Jessica would bring it to me, and she'd be like, "Oh man, right? I don't know if I feel comfortable paying these." And for us, the way that I communicated it to her was, Jess, you always want to remember, right, that this is an and asset. And I think that's one thing that often gets overlooked is, right, if this is a deposit that is going here for the meantime till we want to come back for it, till we want it, or until we need it, right? So it's just that, like Anthony just said, it's a cash management system. It's a holding account, whereas the problem or the confusion comes in with most people is they're used to looking at those types of payments to traditional qualified plans as an expense, meaning that, hey, if I put that money in there, I can't come back and get it, right? And so at the time, we're self-employed, and we still are, and so putting larger chunks of money away out of reach was always a concern for us, and I just always had to remind her, and I remind myself as well, is that, hey, we put money in there, we can always come back and get it if we need to or want to.
Let me add a story in there as well, because I
Great.
had very similar with my wife. Like when we made the transition to go off on our own, cash flow was a little tight, and we actually have a policy on Becky. And then the premium notice came to the house, and Vicky's like, you know what? I don't think we can. I don't think we should do this. But I'm like, babe, okay. have you listened to our podcast? Right. But like
Episode 7.
right.
Yeah.
But I was like, look, we put in, I think I don't know what maybe it was like $2,500, but it's growing by 3,000.
Yeah.
So, and you know what? Next year we put in 2,500 and it's grown by 35. Like, why would we stop doing that? And also I go, look, one thing we can do, we can put the money in, and you know what? If we need it back, we can take a policy loan and that can be direct deposit in our account in 7 days.
Absolutely. It's funny is usually we'll get these questions around this topic is usually in the first several years of having a policy, right? Mm-hmm. Because once somebody sees themselves, hey, making a premium payment and then seeing that overall increase, they're like, man, I should have got 2 of these. Like, wait a minute, you didn't tell me it was going to do this. I was like, well, I did, and I had to remind you every year for the first 5 years, right? So usually it's always up front, and then once they kind of start to see that, then they come back for more.
Well, Cameron, that's a great segue. Like, if you're wondering, well, how do I get one of these policies, or how does this work, or maybe you have one and you're not sure exactly if it's set up well, you know, if you look in the show notes, you can get on what we call a discovery call. And no obligation, and let's just kind of go over to see if infinite banking's for you. If it is, we're talking about the next step. But if it's not, then at least that way you guys know.
Absolutely. Hope you enjoy this episode.
Make it a fantastic day.
Take care.